Hi, everyone. Welcome to today's webinar with Finsley. We're talking about Treasury transformation today. How to get Treasury transformation right at your bank. And I'd love to welcome my panelists today, our good friends from PwC and Synovus Bank. First, brief introduction for Tanvi Patel. Tanvi is director at PwC's Financial Services Banking Advisory Practice. Her expertise, as we well know, is in steering payment strategy, vendor selection, and transforming payment programs from end to end for commercial and retail banks. We also have our friend Seth Marlowe. Seth is Senior Director and Head of Treasury Strategy and Product Innovation at Synovus. He leads their Treasury Product Management Group, their International Treasury Management Group, and their Strategic Solutions Consulting team. He's a recognized thought leader, and everyone knows him as the Treasury Whisperer. He's famous for that particular moniker, and he is also Vice President and immediate past President of T-Many, which is the Treasury Management Association of New York, up in New York. Third, we have Christian Mishaw. Christian is a principal in PwC's Finance Transformation Practice, and she specializes in financial treasury and working capital management with 20 years plus experience in the industry. She has led global cash and liquidity management, digital treasury payments, and large-scale finance and digital transformations. Her specialty in treasuries is in treasury strategy and digital transformation, and she works directly with PwC's clients in their finance, treasury, and digital teams to deliver value back to those corporate organizations. And today, I'm your moderator, Brian Anderson, VP of Bank Transformation at Finsley. Just a quick hello and welcome. Welcome, Tanvi.
Hey everyone, good afternoon. This is Tanvi Patel. I think Brian already did a good intro. So I'm here to help provide insights on how we see from a consulting lens on what we are hearing from our corporate clients as well as banks like Synovus on how do we get the best mixture in today's day and age where everything is evolving and everything has become as a customer experience. So it's critical to talk about this topic as we think about the end-to-end transformation.
Awesome. Thanks, Tanvi. And Seth, welcome to you, my friend.
Thank you so much, Brian. Great to be here today.
Awesome. And Christian, welcome to you as well.
Thank you.
It's funny how at least all of us, are being geographically distributed as we often are. I don't think three of us are very distributed at all. We're probably all within 10 miles of each other.
Absolutely.
And Tanvi, you're not far either. So awesome. So thanks very much for joining us today. Let me give a quick intro as to the topic of discussion. We really are finding that it's more and more challenging for banks to win and retain corporate business and treasury management business. We're trying to react to threats from both the financial institution competitors that we know of, as well as a growing market of fintechs that have deep focus on certain business segments and processes. And so that it just keeps getting harder to ways we need to compete in treasury management. And banks are looking at these changes and looking at these threats and trying to define strategies. And if banks make impulsive changes or they don't really look at planning the transformations that they're trying to do, it can result in in suboptimal results, hurting the bank's ability to innovate, slowing them down, adding technical debt where there's already a difficulty with convoluted architecture. So what we really want to discuss today is how to ensure that you kind of have a successful and future-proof treasury transformation at your banks, and of course with the focus and the lens on keeping the customers happy. And these, the 4 areas we see here at Finsley where people are focused at banks is making sure that they have a next generation omni-channel, high-touch customer experience. The best experience being so many of us are used to what we see in the consumer world, where consumer experiences are very easy to work with, high touch, and extending that to complex treasury services is a real challenge. Second piece is to future-proof the way we manage the bank's payment infrastructure. So that's something that all of our panelists are keenly focused on. Third is solutions for international banking and transaction banking, areas where you have specialized services like foreign exchange or trade finance, or just high volumes of payment transactions, ensuring that that is another key pillar of serving the corporate community and the treasury community. And fourth, a relatively modern piece of the puzzle is an open API-based ecosystem, so that the banks and their treasury management customers can talk with each other via API, as opposed to old batch-based or file-based processes, and streamline the way that customers access bank services, and providing banking as a service in an open way, embedded in the systems of corporate treasury they work with. So with that all said, I'd love to hand this over to Kristen first. Given your experience, Kristen, your background in corporate treasury and large corporations, and now your work with PwC as principal advising these bankers and corporate treasuries, give us a little insight into the expectations of the corporate treasurer today, and what do they really need from their banks?
Sure. Thanks, Brian. So I think it's important to kind of understand the macro themes that are going on in the treasury space specifically, and then we can hone in on kind of what they expect of their banking partners. So, their regular day-to-day activities that they're dealing with on funding the company, managing risk for the company, dealing with, issues with supply chain, dealing with the macro economy on interest rates. That is all kind of challenges that they're facing every day when they wake up and engage in their work environment. I say on top of that, they're dealing with a couple of other themes, right? So you mentioned kind of that high touch experience. So a lot of the new kind of folks coming into the Treasury Department or through finance functions are used to kind of how they behave with their banking environment in the consumer space. So it's very odd to them that they would be asked as kind of a job function to be logging into bank portals, pulling down bank statements, rekeying information into Excel spreadsheets,
Right.
double checking, providing third level approval on workflows, right? So that's one piece, right? And so how do you make that Treasury Department interesting, exciting? How do you get these analysts actually using their brains to really accelerate? And then the treasurers are being really challenged to be more strategic, right? That role has grown over the 20 years I've been in the industry. I've seen that role of the treasurer really become a strategic advisor to the CFO and CEO of the company, right? They're looking at not just cash forecasting, but how does cash forecasting and working capital come together? They have access to a ton of data. And so I mention all of this because what ends up happening is that transforms into what are their demands of their banking partners, right? They want to know, like, why does it take so long to open a bank account? Why do you ask me for the same information every time I open a new bank account? Why can't you show me bank fees, right? Why can't you show me granularity on what I'm paying for these services? Why, when you tell me you have an API, do I get the data once a day? I get it in a batch process still, right? And so I think it's really important for the folks listening to kind of this webinar to really understand that, these folks are in these roles really trying to drive a digital experience, be strategic advisors, be able to make decisions, and they're expecting their bank partners to be partners along that journey, right? And I think that's an advantage. You start to see advantages with some of the banks that have actually stepped up and invested in that space.
Agreed. That's great. Excellent. Thank you, Kristen. So given what Kristen shared there, Seth, and the demands that you're seeing from your many treasury customers, how have you and your colleagues at Synovus tried to address those expectations, and what are you guys investing in to build out the Synovus treasury brand?
Well, it's a great question, and I think it kind of falls into really two primary areas. One part is what's really the evolving role of a banker, or more specifically, a treasury management consultant or sales consultant. That's one side. The second side is the whole digital experience and technology piece. So let me start on the on the banker side of it. And I think the expectation today is that your banker is really less salesperson and much more consultant. And so one of the first things that we did along our journey, that we're well into year 3 of our journey, was a revamping of the way we go to market and how we talk about solutions. It's not about products and what they are and what they do and running to do demos. It's much more taking a consultative approach to it, so that we're talking about things like working capital, DSO, DPO, really where that customer is in their journey and what are the pain points that they're experiencing. So as we develop a relationship with a CFO or a treasurer and an organization, whether it's a prospect or whether it's an existing customer, a lot of it comes down to, trying to get inside the organization to do what we refer to as a business process review, which may look at things that are, the day-to-day practices and processes that are happening in Treasury, in AP, in AR, and to, be that fly on the wall to, although it's it's sort of a chatty fly on the wall that, asks a lot of questions about, well, how do you do this and how do you do that? And, watching the process, watching the systems that are being used. Fortunately, today I am in a chair that can, pivot around, and watching, the Treasury or AP or AR analysts literally pivoting, from one screen to another. I mean, fortunately, today we're not in the world where most people are sitting there with one laptop or with a desktop, on one screen. But very often, they're sitting there with, an ERP system on one screen, a bank portal or multiple bank portal windows open on another screen, and then a bunch of cheat sheets in the form of, Excel and Word documents and PDFs that have procedures and processes and so on. And so it's a lot to take in. And let's not forget about the cheat sheets that are actually pinned to the wall that have got notes as well, things like GL accounts to use when they're doing, actually doing, cash application on, let's say, receivables. So really that's the first part, is understanding the organization to really be able to come in and identify how we as the bank can match up their pain points with solutions that can help, and talking about the outcome of what can happen. And usually that outcome is more efficient processes, a better digital experience. It's, improved DSO or DPO. It's still, I mean, I feel like it's as relevant today as it was probably 10 years ago, when I used to have lots of conversations about moving from paper to electronic. It's still out, and we see customers every day that are still writing checks and getting them to move to electronic. So that's one major side of it. Then there's the other side, which is really that whole digital experience and what that looks like. And there, for Synovus, it's, one of the things that we completed last year was a rollout of a new digital banking portal for our customers that do actually want to be online. And we do have a lot of community bank customers, small businesses, and they are accustomed to going there to do all of their day-to-day banking. And so we're now at a point where we have a modern digital UI in front of our customers, and there's one of them. I mean, we migrated from 2 legacy platforms that were out there, and that frankly put a huge strain on our organization to be able to put the kind of top tier customer service out there to our customers when suddenly we're managing 2 legacy platforms as well as a new platform that we're rolling out. So now we've got everybody on one platform, simplifies all of the customer service aspects, and it's a fresh, clean look consistent across the board. But that's just really the beginning. When I joined the bank 2 years ago, I think a lot of the question marks were, how do we fill the gaps in our product set as we are increasingly moving upscale in terms of the size and complexity of our treasury customers. So it was trying to fill the gap of integrated receivables, integrated payments, a new look and feel to a modern foreign exchange platform, and so frankly, we've been in build mode, for the last 2 years, and I don't see that changing because there's a momentum and there's a focus to all the things that we're trying to do that will also include getting us to APIs, open banking, and my boss, Catherine Weislogal, said to me when I joined the organization, she's like, I'm going to tell you, Seth, it's going to be a wild ride. You're going to need to buckle in, but you're going to be like a kid in a candy store because there's just so much opportunity. And it's been just that. And, so we're very much down the path and have a lot more things to do over the course of the ensuing months and years ahead.
I admire that wild ride concept with Catherine and you, Seth, and Synovus in general, and that, coming from a background of technology companies myself, it's always a wild ride. You're always pushing product roadmap. You're always building if you're doing it well. And you guys are constantly building as of recent, and you've got some great success. So congrats on the single portal and the single experience and the single customer service area. That's a big deal for many banks.
Thank you.
So Tanvi, I know I'm sure you're anxious to share. So as you work with the banks and other customers at PwC, I know you have many strategic discussions on how to modernize and transform treasury management ops. I'm sure you have some perceptions that you can share around today's ecosystem for treasury management between the banks and the corporates, and what do you see the best banks doing to serve their treasury management customers?
Sure. So I think it's a little bit of both what Christian and Seth mentioned, right? Like just understanding today's lay of the land, right? The treasury world at any bank, whether it's a small or big, is fragmented, right? We don't have the one amazing solution, a vendor solution, right? So it's kind of the banks, what we are doing, there are very different pathways to modernize, right? You can modernize starting with your customer experience, if that's your pain point. You can modernize with your platforms, like for example, you're still doing paper-based. You want to kind of pick your starting point appropriate that you can then build that roadmap across it, right? So a lot of banks kind of, when we advise bank, we're like, okay, where to start, right? Modernization is a very big term. You can modernize a lot of piece of it, but it's critical to understand the components, define what's needed for you and your client, and then kind of decide where you want to go. So that is where we spend a lot of our times with, like, what are your pain points? Is a platform a pain point, right? Do you have 20 platforms, like Seth was saying? Do you have 5 portals? Then let's consolidate them, right? Like that is the plan. Then it goes into the whole technology piece of it, like how are we going to consolidate it? Versus, hey, as a bank, we are growing within professional services business. I want to take my existing product and customize that product for professional services. I have basic products, but how do I make sure that I leverage what I have in my portfolio of products today? But like exactly Seth said, just don't sell your product. Customize the product for the target client that you're doing, right? Like how are you helping taking your ACH or wires or your APAR, and how are you making that relevant for that industry, for that client size, so that way you can start building that niche around it, right? A lot of banks, as they think about modernizing also, they were like, oh, we have all the treasury products. Now, honestly, yes, you should have most of the treasury products, but which is the revenue generating product for you? which is the product that your clients are really going to come to you versus a JP Morgan or versus a Chase, right? Like we all kind of need to think through a little bit critically. And then at the end of the day, it comes back to customer experience, right? Like, what do you want to have your customer experience, you as a bank or you as a partner, as they modernize their business going through the journey, right? So there are a lot of pathways we figure out the banks to do. I think the biggest challenge that I've seen banks as they modernize is just getting all the right stakeholders involved, right? Treasury, payments, it touches your entire bank, right? It's not just the ops team that needs to make a decision or the tech team that makes decision or the treasury product team needs to make the decision. I think the thing is like, how do you bring the right stakeholders within the bank together to talk about it strategically? Because this is your chance to not just modernize, but to rewrite processes which are very like Band-Aid today, right? Like
I love that rewriting.
Let's not repeat what I have today with a new platform or new process. Like, how do I make it more efficient? And that's why I feel like if you get the right stakeholders, you will design your future state, which is future-proofing it, that you're not just doing the whole bandage approach that we land up doing because of legacy acquisitions or platforms or whatever that is, right? It's like, take the chance to truly challenge your thing. It's not an easy task to take. I think a lot of banks do get scared when we talk about it, like, let's rip everything. Nobody likes change. We don't like change. The banks don't like, your clients will not like the change, but we are changing for the future. It's okay to go tell your client, I'm going to come up with a new portal, similar to what Seth was saying. We are going to change. You're not going to have fight, but explaining them how that omni-channel experience is going to make their life easier is the way to approach it versus saying, I can't go tell my client that you can't send me a check or you have to call me. Like, log it. It's okay. It might take a learning curve, but that's the benefit of modernizing, right? Like, let's challenge ourselves. It is a wild ride. We can keep improving once you get into it, right? You can go a lot. And especially from a corporate side, as Kristen also said, all of them are thinking about now through COVID, everyone's like, oh, my bank for my personal reason can give me this. I've never called a bank in the last 3 years. For my business, why do I have to call a bank, right? So that mindset, the customer expectation from a corporate side is all creeping in. And if we don't act fast, then you were going to be the laggers versus your chance to kind of take that opportunity and like push the wheel and kind of let's design something which addresses to our client, right? Like, I think it's also a lot of banks we talk to get into be like, I want to do what XYZ bank did down the street, but do you have the same client set? Do you have the same challenges? I think that's where we need to kind of just make sure that as you design it, be holistic about your idea. Yes, it's scary. At times you will think you're boiling the ocean, but sometimes you need to take that step back and look at the holistic view. When if you don't do that, then you're just like, again, you're doing the same thing what we've done for the last 20 years, like fixing one pillar of the organization, which is not going to make a lot of difference.
Right. No, I love the focus that each of you put on what is truly looking at the processes, looking at the process today, looking how it can be improved, looking at the whole from beginning to end. And that's where true process improvement occurs, both within the bank, within the corporation, but as the two interact. And you can't be lazy about it, right? You can't be lazy and not look at the whole picture. So speaking of that, I'd love to put out our first poll to the audience. We have a poll, and I want you guys to take a look. Just push that, launch it now. Okay. So the question really is, what is the biggest gap that we see at banks in serving their treasury customers? So if you could share your opinion on this, that would be great. And then I'll pose some questions to our panelists regarding what their thoughts are in this area. The answers are coming in fast. Panelists, you see the poll on screen, correct?
Yes.
Great. All right, give it a few more seconds, give it a full minute for responses. Perfect. Thank you for those who participated. So I'm just going to end that poll and share the results here. So what it looks like people focused on here was legacy backend technology. And I guess that's probably a problem everywhere in at least one part of the commercial banking or treasury management space. There's always things to invest in and too many things, too many projects that you want to do. You got to balance and prioritize. But I want to pose the first question regarding gaps in serving customers. You know, Tanvi, what do you see that with the banks that you're talking to and their efforts to digitize and differentiate themselves and areas, I'm specifically thinking of areas of technology where you see people really hurting, and what are they doing? What do they need to do now?
Sure. So I think from a technology perspective, right, I think one thing that I've seen different in the treasury space is the adoption of fintechs, right? Like you going and having a vendor solution to do your AP or your AR or want to offer that. That's pretty good within the treasury ecosystem, whichever bank you go to. I think that's pretty nice. But that also comes with, are we ready for true real time? Do we have the host tools? Are we still accepting batch, as Kristen had said initially, right? Why can't you have API enabled platforms where the client can pull data? We don't want to kind of, the struggles that I feel from a digitization perspective is, do we understand our tech stack? Do we understand the ecosystem of the vendors that has made our tech stack? Because every bank that I've ever come across has vendor solutions within their treasury ecosystem. How do they all integrate? Can they coexist? And it's the data, right? So to get that self-service, for example, that we want to offer to the treasury client at the end of the day, you can only offer self-service if all your platforms integrate on a real-time basis, or even if it's batch, but you are trying to understand today, and Seth, you can correct me if I'm wrong, our platforms don't talk to each other, whether it's your treasury portal, whether it's your wires platform, whether it's your new RTP platform that you're going live with, or your back-end billing system. None of them actually talk in a very synchronized way today. And hence, when your treasury client calls your sales team, they struggle because they have to have those 5 screens open. They need to then understand, how do I navigate it? And then it all impacts your customer experience and your internal client experience, right? Like the bank team is now, you can't throw 100 bodies at a solution. You can temporarily, but you need to eventually have all of your platform designs. So it's critical in terms of your architecture. How are you blueprinting your ecosystem and bringing these digital drivers, like how are you using chatbot? How are you using machine learning? How are you getting that? Or how are you getting vendor solutions that have built technology based on that to kind of start upgrading your end-to-end tech stack across your value chain? Whether how you source your client to how do you service your client? All of that, to me, I feel like today we are seeing efforts have, but we still don't think about treasury as the end-to-end value chain, where simple example like onboarding. Today, most of the onboarding solutions are manual. You're still taking pricing and performers in Excel spreadsheets. How do you tie it back? Like that whole billing becomes a nightmare for someone to know. And the biggest banks that have done it have paid benefits out of it because they don't have chances of revenue leakage, right? That platform connecting those two will give you that end-to-end view, so you can confidently say, I have a view of my per product, per revenue, per client, per product, like all of that today. If we walk into most of the banks, it's a manual scramble to pull data and then come up with some math to connect the dots, right? So I feel like the digitization can work in a lot of ways, but we need to think about it from the whole value chain, starting from marketing and sales, and how do you service it, right? And then how it connects to your back-end systems, because you can say treasury products, but AKA that sits on back of your payment platforms. So your payment platform integration is also very important when it comes to treasury, because you can't modernize just the front end. You can, your clients will see the experience, but then your ops team and your servicing team are not going to like you that much because they're still the manual work that they need to do, right? And eventually you can start, and then there has to be a roadmap to fix that.
Agreed. Agreed. No, and that's a good point. And Seth, you just heard that set of challenges thrown in your lap at the bank.
Well,
Tom's absolutely
I
right.
live that every day,
You know,
and I jokingly say I would love the bank to throw this huge bag of money at me and say, here, go solve all the things that you need to solve. And there is a reality here that Treasury is one of many lines of business within the bank, and while most of them are, their customers are serviced by Treasury, we don't service everybody, and
right,
there has to be some equity in terms of the things that are needed in those other lines of business. It's while I would love it to be it's all about Treasury, the reality is I have to be equally concerned with the needs of the wholesale bank and the community bank and the mortgage division and private wealth and so on. And every bank has that. And I think no matter how big that pot of money is, and I hate to always, I think everyone picks on JP Morgan because I think they always, it's in their annual report, it's oftentimes, publicly stated, how much they spend on technology. And I think the latest number is like $13 billion. Doesn't matter how much the number is, but how it's allocated, who's getting to use it, and what are the things it's being used on.
right.
Even if I had a lot of money, the other piece of the equation is I need the people to be able to implement that. And you can't do everything at the same time. You really have to stage it in order to get to a level of executional excellence, because if you don't, you're going to end up with not only frustrated bankers and other folks in the bank, but you're going to end up with customers that are dealing with too much change too fast. And we know, I mean, we've certainly been there. If a migration or conversion or new product doesn't go well for a customer, that stings them for a while. And we've definitely seen what I would describe as a bit of migration or conversion fatigue. And it affects customers, it affects a lot of people in the bank as well. So trying to space things out in that strategic plan becomes really, really important in terms of how you're deploying.
That rhythm and cadence, it has to be a tough one to manage it for both the internal teams and the customers. I get that idea of conversion fatigue. I know, Seth, you've shared with me in the past around, challenges around just change management in the organization. And so when you came on 2 years ago and working with Catherine Weislob on the team around prioritizing and evaluating the changes you wanted to make, what were some of the starting pillars that you had to think about? How do we craft this strategy to go from where we are to where we think we want to go?
Well, I think number one, we really had to do a good hard look at what our product gaps were. And those were those were pretty easy to identify. Excuse me. But then it gets to, well, do you just want to put something in place so that you can be a Me Too player? And that has value, but is it enough? So where there's an opportunity to be able to leapfrog, we've looked at solutions to plug in, and sometimes it's taken us much longer to identify the right partners to work with to make that happen. But to me, it's far more important to have the right solution that can actually, is not going to be outdated virtually by the time it goes live.
Right.
So we're always looking for that little extra secret sauce that can be a differentiator for us as we're putting in new solutions. So it's as much strategic planning as you can do, and the bank is on an annual cycle doing that. We're continually tweaking our roadmap and the things that we feel are important for our customers and based on feedback that we get from them and directly from our sales folks and our relationship teams who are out in front of the customers on a regular basis. And we're trying to do more of that, frankly. I mean, we're looking at standing up some advisory councils so that we can, have folks on the product side as well hear it directly from the customers, and those that really do have a sense of what their struggles are and where they want to be. It's very clear, and I think we've heard this. It's especially as the decision makers are getting to be younger.
Right.
There is an expectation of why can't it be as easy as Amazon and Starbucks and be it fintech or just e-commerce or brick and mortar that's done a really good job. It's like, why does it have to be so complicated?
Yeah.
It doesn't. But then again, there are some things that we do in Treasury that actually, aren't so simple. There are
Right.
complexities there, and trying to make the right balance there is a large part of what we need to do as product folks.
Yeah, I think product management has become so critical. Some banks, not so many larger banks, but certainly smaller banks or growing banks, we've seen at Finsley have where they invest in good product management. You're becoming less of the traditional bank and more of a technology company. I think every bank is, and that product management for both the delivery of the actual banking service as well as the technology that drives it are intertwined so in such a deep way that that product management function seems to be hyper critical to me now to help bridge the customer facing folks, the operations folks, and the products themselves, to make sure that there's someone looking at what Tanvi mentioned, which is a holistic view of the world. And though I see that as really important. I also wanted to give Kristen a chance to weigh in here too, and I think the way maybe and feel free to disagree, Kristen, but one way we can think about this is, what do you think can have an immediate impact on the corporates? The corporates right now, you've shared with me in the past in our discussions, things around friction in services and analytics, you mentioned earlier. What are some of the quick wins that banks and corporates could work on together in this space?
Yeah, I think so. I think understanding the customer's requirements, I like exactly what Tanvi and Seth mentioned around really understanding what they're asking for, though, right? Short term and long term, because this technology change takes time, right? And so you need to have a flexible roadmap that addresses the immediate needs of, easing the friction between your customers and the bank, but then a longer term play that allows them to enable and kind of transform with you as they go on their digital journey. It's really hard when, like, a bank, for example, comes out and says, we're changing a format or we're implementing a new system. You need to help them kind of along that journey so that you're not introducing technology projects for them where they have to use their very limited resources to go and pull. If the value's there and you can prove that there's value behind the change, that's where they can kind of formulate that business case to get the resources. Where I've seen a lot of successes where the banks are partnering with other technology providers to embed their services in those platforms, because that enables and reduces that friction that we talked about as kind of one example. I'd say the only other thing just to highlight too is everything we've talked about kind of anchors around data, right? I think Seth gets tired of me always talking about data, right, when we chat. But to me, like the focus on data as the underneath every business process, the interaction with the banks. What is bank reporting, right? It's visibility to the payments, the receipts, right? How does that connect into the corporate, your client's business process is critical. And so the more that the banks spend time on making sure their data models are set up properly and that there's lineage and connection back to their client's process, the better. So structured data, connectivity back to identifiers, anything that helps that corporate client be able to, Seth is holding up a sign. Anything that helps that corporate client connect that back into their business process, that reduces friction for them and enables that valuable data connectivity and decision making that they're trying to do.
Yeah, it is all about the data, as Seth said, and it's having been in my past seen institutions just coming up with master data and transactional data management programs that help them drive this at the corporations, not even regardless of how the banks help them provide it. It's a massive advantage to have the data available at your fingertips and in an organized way. And so definitely, where people like us at Finsley can help the banks provide that, I'm sure that's just an extra leg up to make sure that the whole value chain from technology company to in tech stack to bank to customer can be made smooth and made easy. So I'd like to launch one more poll and hear the group's for the participants' feedback as well, and then we'll have the panelists address the questions. What is your bank's top priority for 2023 to serve treasury management customers better? And so 2023, obviously there's scores of treasury services. I had the great pleasure of being with Seth last week at Synovus and learning about all the different services that the bank provides. In my world is usually payments, trade, and FX, and that's only one sliver of what a treasury management organization offers. So it was really incredible to see the breadth of what just treasury means to a bank and to its customers. So looking forward to the answers here in the poll and to hear some of the things that our panelists have to share about 2023 and these different things that the treasury management customers are needing and the banks are investing in. Give it a few more seconds. Wow. Well, I'm a little surprised here that API provisioning is as high as it is because it's difficult. And it's something that is a technology project both for the bank and the corporations to integrate APIs. And then, of course, it looks like visibility to customers, especially as it relates to data, is pretty high here too. Great. All right, so I'm going to end the poll. Okay. So here are the results. All right, so first, we're talking about bank priorities. Let me let Seth comment first. As the banker here on the panel, I know you guys have defined a very clear set of priorities for 2023, and maybe you can share some of the key things that you found for this year and that your customers are demanding.
Sure. Well, some of them definitely, line up with some of the priorities from the poll, but not completely. I think that depends a lot on where each individual financial institution is in their own journey. I'll tell you that, we've, in late 22, we rolled out a brand new FX platform. And, we're looking at, the additional stages in that arena. The biggest ask that I've heard in the foreign currency space, literally since I walked in the door at Synovus, was multi-currency accounts, or as I prefer to refer to them as foreign currency accounts, since they're single accounts,
yes,
single currencies. But so that's something that's not just on the roadmap. I mean, that's an active project coming real soon. Interestingly for us, as a regional in the Southeast, we've provided an array of international services, and we don't have branches or people offshore or in Europe, but we do have an international team, and that's really been focused on the foreign exchange and also trade finance. But we've taken more of a holistic approach, and we've actually taken and we've insourced a lot of the domestic wholesale trade finance activities and brought it into our group so that there's a little more critical mass of expertise in working on that. And so, we're looking at digitizing that process for our customers and for our bankers to simplify it. A big piece that we are focused on and have been is on the payment side. And I would say definitely in alignment with the simplifying payments on the poll. It's very clear that corporates want to be able to do their payments in a variety of different ways when they're ready to, when they're approved in their core system, not necessarily having to wait to run a batch at the end of the day. And so, we're working towards an integrated payment solution, and I'm very specific about this. I talk about this all the time. It's not payables, but it's payments. So that, as our customers have payment needs, whether it's traditional AP, whether it's rebates, refunds, core process of what our customer does on a day-to-day basis, we want to be able to have a simplified digital experience that can include, a file upload that can be done multiple times during the day, a file that has multiple payment types in it, but also being able to do that via API if that's what the customer chooses to do. So trying to, find the right technology partner to plug into that with our vision, and also to get to what we like to talk about is intelligent routing. When and where does that payment need to go, and really doing a matching of what, our customer, the methods that they're willing to pay out, but in conjunction with what their customers or their recipients actually, how they want to receive the money. So,
Right.
It's a little bit of a matching and a least cost routing kind of pulled together. So,
Right.
directionally, that's where we want to go, and to have it so that, it's not just, the traditional payments of check, ACH, wire, virtual card, but all the new payment rails that are coming down the line. Our viewpoint on that, frankly, is it should be inclusive of all the things that we will be able to offer, if not next year, the year after. So it would be RTP, it would be FedNow, it would be push to card, it would be Zelle, it would be any kind of potential blockchain, stablecoin, crypto that we are standing up, in the bank over time, so that it becomes a very payment centric piece of our overall treasury experience.
That's a great point, Seth, and I think it's a good transition into a question I was going to pose to Kristen, which was we talked to how hard it is sometimes when banks make change for corporate treasurers to react to and to deal with technology projects. But there's been this move in the past 5 years in the US with the clearinghouse and real-time payments, as well as the Fed coming and bearing down on everyone this summer with their launch of FedNow, and talking about treasury disbursements and military payments, coming through FedNow. What's the perception out there at these corporations? Do they care? Are they skeptical? Are they optimistic? Do they think that they can improve, payables and receivables with immediate payments? What do you think that they're thinking?
So it somewhat depends on the industry segment and the type of client. But I think at the kind of core of every corporate I work with is that they want to pay on time, right? So at the end of the day, to Seth's point, give me a solution that allows me to set rules and pay the most efficient, low-cost manner possible. So if I have, kind of my standard payment runs with net 60-day terms, and I want to batch those and have them ready to go when the day comes, I want to settle those either through low value clearing, high-speed rails, whatever the lowest cost mechanism is. But I want the guarantee that it's going to reach my recipient on time.
Mhm.
And I want transparency if there are fee deductions or changes to that payment on what that is, so that there's no change when my recipient actually receives that payment on the other. At the end of the day, that's it. And the same holds true on the receivables side. So
Of course.
pay me on time,
Mhm.
show me the amount that was intended to be paid to me that matches the invoice I'm trying to apply the cash against. If there's fees or deductions, Show me where those are so that I have that data lineage across. And so as the treasurers are working more and more in the working capital space and trying to affect their cash conversion cycle, they want the certainty on the data, the payment trends, they want the repeatable nature of that. And so these rails are going to be fabulous if they can offer a low cost certainty and transparency to that, right?
I love that certainty and transparency, because they're supposed to be immediate and irrevocable. And that's where certainty comes in, is that irrevocable. With ACHs, you have returns, you have the ability to FedWire, you can pull things back. You can't do that with RTP and FedNow, supposedly. And so hopefully that's a positive thing as it turns to certainty. I wanted to let Tanvi comment as well in terms of the areas that you see the banks having difficulty with in delivering treasury management services, and maybe not just some of the answers here on technology, but what are the things that you see as critical for a bank this coming year and the next year to ensuring that they are competitive and they are keeping up with the Joneses?
Sure. So I think in terms of technology as a whole beast in itself, right? Like, as if you solve that, right, there are other components about, to Christian's point, how are we providing the customer service, right? Like Christian said, I don't think your corporates will care how they're getting paid. All they care is like, just pay me on time. At the end of the day, they expect the banks to become that intelligent routing, right? Like, I'll just tell you, I need set to get the money by tomorrow, and this is the amount, right? Then hey bank, you're supposed to identify the least routing, how are you going to do it, and provide that transparency. Like, I sent money to Seth, it was settled, he has an account, this is a confirmation, and this is the fee you got because we used RTP, or this because we used same day ACH, or whatever that was, right? I think that is where you will start seeing it. However, when it comes to, as banks think about modernizing and building that business case for their CFO to ask for investment, that is where you feel like you need to really showcase what are you trying to approve, what are you trying to solve for. So servicing, for example, is a pain point. We've been talking about servicing with so many clients. Seth, we work with you on that too, in terms of like, today, the way servicing works is mainly we have people, right? What you can add more people to it, but there are things that drives your servicing efficient. One is, are you providing that platform, a unified platform for your bank users to get their answers back, right? Are you talking about how am I going to segment my clients? Am I truly providing white glove service? How am I categorizing my clients, right? There will be clients, and at the end of the day, you'll have clients who truly need white glove because they're using really complex products, versus clients that are like, hey, low maintenance, I got it, I'm just using your wires and ACH, I don't need so much, just give me a self-service portal. I don't want to call the bank, I don't want to call a servicing call center, just tell me I can get answers online. So those servicing is very critical in terms of as the bank grows or decides to target a specific client segment, your servicing aspect becomes important. And it's not all tech driven, it's also your process. How are we training our servicing teams to make sure that we are making our clients adopt the approach we want them to take? How are we educating our clients by saying there's a self-service portal? You can actually do that. If you want an image of a check, don't call me. You can actually do it by yourself. You'll save time, you'll multitask, right? Things like that, I feel like traditionally, we've always hesitant to tell the client, don't call us, because we always promote bad behavior by saying, right, if my client calls, I'm always going to help them. But that's, it's not always the efficient way to do it when it comes to servicing. So to me, I feel like if you are kind of modernizing and building your case for your senior executives to approve it, you need to make sure exactly what you're solving for. How are we going to solve for? Who are the partners involved? You're not going to do it all in-house, or you can if you have the skill set from a tech perspective and product perspective. And then, how are we connecting all the dots? I think what we see the banks struggle, especially not just Treasury, but even payment modernization, is show me the ROI. That's all your CFO is going to ask me, right? Like, I'm going to give you that 20 mil to implement a payment hub or whatever that is. Show me the timeline on how we are going to get efficiency and show me the ROI we're going to get out of it. So I think
Right.
Getting that business case for modernizing your treasury and payments is very critical. And you think about it, right? Again, you don't have to boil the ocean. Pick couple, pick the most pain points. Back to my initial point, like think where you want to start, because there are 100% that are quick wins. And if you kind of start with the quick wins, your leadership sees the impact, your client sees the journey they're going to embark on to help themselves can start using you in a more modern way than what they've been traditionally doing.
Yeah, I love that. That's great. It's being able to service the customers smartly, scalably, so critical to all of this. And so, just the last few minutes here, as we have our experts with us, there's a couple of questions that come in through the chat, and one specifically I wanted to point right at Seth because it was asked, directed at Seth. The question is really, can you talk about the approach and hardships you've had funneling clients into complex products or seemingly complex products like integrated receivables and leaving the idea of traditional solutions behind?
Yeah, it's it's hard when you trying to get the right messaging to appeal to the right customer, especially when you're trying to pilot it. And I think what's so important when you pilot something that's new and complex is that there really needs to be a very hands-on white glove approach taken to that customer so that they're not left to figure a lot of it out on their own. And I'll give a perfect example. In our integrated receivable suite, we've branded the whole suite as Accelerate AR. In fact, all of our complex solutions have got the Accelerate brand that we've put around it. So Accelerate FX, Accelerate Pay, and so on. But one of the solutions is a specifically designed to do to make a reduction in the number of exceptions for cash application on the receivable side. And one of the biggest areas where this is needed is with ACH transactions today. They tend to be numerous. The remittance detail sometimes is buried in one line of addenda if it's a CCD. It can be all the EDI data that's buried and oftentimes lost in CTX.
Right.
And other times it's sitting in a portal somewhere, or it's being emailed. And that really is the key to being able to really apply the cash for that transaction. Because let's face it, wouldn't it be nice if it was one payment to one invoice? But that's not reality. That's the happy path, but the unhappy path is, and I've lived this in my practitioner life, in consumer products, you've got, one payment that covers 10 invoices. And along with those 10 invoices, it's also, 32 various deductions for trade promotions, spoils, damages, you name it, trying to match all of that up. So, we have this solution that does that. We call it Accelerate AR Match. And, it's infused with some AI to help, learn what the exceptions are and how to code for them, so that instead of this being a manual effort for our customer, once it gets into their ERP's AR module, it's already set up. It already has the right information. But trying to communicate that succinctly, trying to get through the training of the customer, it's not a one-shot deal. And because it's AI, we live in an ADD world. Everybody wants it and they want it now. What do you mean it doesn't work the first time? Well, it has to learn. And, so it's baby steps. And so, trying to, find the right customer to pilot it that's got the patience for it to learn and is willing to do the setup that's needed and has, frankly, the right mix of payments. And to me, it's like, well, find someone that's got a moderate amount of ACHs and that they happen to be admittedly struggling with posting the cash from those ACH transactions. So you've got to look at it holistically, kind of end to end. and find the right customer that really fits with what the capability is.
That's great. Thanks, Seth. Thanks for that. And so unfortunately, we're running up on time, everyone. Thank you very much for joining. Thank you very much to our panelists, to Tanvi and Kristen. Thank you very much for being great partners and being part of this session, and sorting out as well for those of us who weren't able to attend in person. And have a great rest of your day.
Thank you.
Thanks, Brian. Thanks, everyone.